Okay, let's dive right in. We're going to look at the very foundation of our cities, concrete. Now, I know what you're thinking. It's an industry that seems pretty traditional, maybe even a little old school. But today, we're unpacking an analyst report from FSM1 that paints a totally different picture. It's about a Singaporean giant, Pan United, that isn't just mixing sand and cement anymore. They're betting their future on making construction sustainable. And, according to this report, it's turning out to be a very, very profitable bet.
It sounds kind of like a riddle, doesn't it? I mean, we think of skyscrapers as these massive symbols of consumption, right? They take incredible amounts of energy and resources to build. In fact, the cement industry alone is responsible for about 8% of global CO2 emissions. So how in the world can one of these huge structures actually be part of the solution to climate change? Well, the answer to that question is really at the heart of Pan United's strategy, and it's the key to the whole investment case we're about to explore.
And before we get into the how, let's talk about why this matters, especially for investors. This number right here, 17.9%, that's the potential upside that the analysts at FSM1 see in Pan United stock. In the investing world, a projection like that is a huge signal. It's the analysts' way of shouting from the rooftops that they think this company is undervalued and that there's a really compelling financial story here that the rest of the market just hasn't quite caught on to.
So, let's just cut to the chase. The bottom line of the FSM1 report is this. They've started covering Pan United with a clear and simple buy rating. They've even put a target price on it of $1.37 Singapore cents. Now, a buy rating from a respected firm isn't just a casual suggestion. It's a really confident endorsement that's backed by a ton of analysis. The rest of our time here is all about understanding exactly what's driving that confidence.
The analyst's case isn't just resting on one thing. It's really built on 5 solid pillars. First up, Pan United is the undisputed market leader in Singapore. Second, their latest financial results for the first half of 2025? Incredibly strong. Third, the whole construction sector has some powerful tailwinds pushing it forward. Fourth, they've got a pipeline of massive, long-term projects that gives them a really clear view of their future earnings. And finally, and this might be the most important part, their pioneering work in green concrete gives them this unique edge that's getting more valuable by the day.
So, who exactly is Pan United? Well, if you've ever been to Singapore, you've been surrounded by their work, whether you realize it or not. They are the biggest supplier of ready-mix concrete in the entire country. That means they've been a crucial part of Singapore's incredible transformation for decades, from public housing all the way to that iconic skyline. They are, quite literally, part of the country's foundation.
And their journey is a pretty fascinating story of evolution. You can see on this timeline, they started out as a small hardware business way back in 1958. Then, in 1999, they launched their core ready-mixed concrete business, which became their absolute powerhouse. But what's really cool about this slide is the clear pivot you can see. The big moment is 2018. That's when they became the very first company in all of Asia to adopt this thing called carbon cure technology, which, get this, involves injecting captured CO2 into concrete. That wasn't just some small operational tweak, it was a fundamental shift in their identity. It marked their transformation from a traditional supplier into a tech-driven, sustainable company.
Now, to really get a grip on their performance, we have to know where the money's coming from. And this chart, well, it makes it crystal clear. A whopping 98% of their revenue in 2024 came from the concrete and cement segment. Now, that kind of focus can be a double-edged sword. It means their fate is completely tied to this one market. But it also means they have incredibly deep expertise, and all their energy is dedicated to being the absolute best in this space. And for us, this focus lets us really dig into their financial health with a ton of clarity.
Okay, now let's get into the good stuff, the numbers. How does this strategy of market leadership and green innovation actually translate into financial results? This is where the story gets really compelling for an investor, and we can see the concrete evidence, pun totally intended, that backs up all the analysts' optimism.
Looking at the first half of 2025, the performance is just solid, right across the board. Revenue is up a healthy 4.3% from last year. But here's the crucial part. Look further down. Net profit jumped over 12%. Now think about that. It means their profits are growing almost 3 times faster than their sales. That tells you they're getting more efficient and more profitable on every single dollar of concrete they sell. You can see it right there in the net profit margin, which got bigger. And for shareholders, that last line is a huge vote of confidence. The dividend per share went up by nearly 43%. You just don't make a hike that big unless you are extremely confident about the future.
And this isn't just a one-off good quarter. This chart does a brilliant job of showing a really powerful trend. The red bars, that's revenue consistently going up, which is great. But the black line, that's the real story. That's the EBITDA margin. It's a great way to measure a company's core operational profitability, and that line is also trending up, hitting 10.3%. This combo of getting bigger while also becoming more profitable, that's the holy grail for any business. It's a clear sign of excellent management and real pricing power in the market.
And they're not shy about sharing the success. This chart shows the cash dividends they've paid out over the last 5 years, and it's just a steady staircase upwards. For a lot of investors, especially those looking for stable long-term returns, this is one of the most important charts you can see. A company that consistently raises its dividend is showing you not just that it's growing, but that it's committed to rewarding its investors directly with cold, hard cash. It's a sign of real discipline.
So we've seen the strong financial performance. The numbers are impressive, for sure. But why is it all happening? What's the engine driving these bigger margins and growing profits? Well, the answer, according to the FSM1 report, is all about their biggest competitive advantage, what the analysts call their green concrete edge.
So what exactly is this stuff? Okay, at its simplest, carbon mineralized concrete takes waste CO2, captured from places like factories, and injects it into fresh concrete while it's being mixed. That CO2 then has a chemical reaction and basically turns into a mineral, like limestone, and gets permanently locked away inside the concrete. It effectively turns a building into a carbon sink, storing greenhouse gases for centuries instead of releasing them. It's an absolute game changer for one of the biggest sources of pollution on the planet.
Now here's where it gets really smart. The market is perfectly set up for this technology to take off. Pan United is getting a boost from two powerful forces. On one side, you've got the push from Singapore's carbon tax. This tax on emissions is going to go way up, which makes old-school carbon-heavy concrete more and more expensive. On the other side, you've got the pull from green mark incentives, which actually reward developers for using low-carbon stuff. The key takeaway here is that choosing green concrete isn't just an eco-friendly choice anymore. It's becoming a financially savvy one.
So, is the market actually buying it? Oh, absolutely. This number is just staggering. More than half, over 50% of Pan United's concrete sales in Singapore now come from their low-carbon and carbon mineralized products. This shows brilliantly that their green strategy has gone from being some niche, premium option to being their mainstream core business. The adoption is real, it's huge, and it's happening right now.
Okay, so a strong performance today and a winning technology are fantastic, but investors, they're always asking, what's next? So let's shift our focus to the future, which looks incredibly bright, thanks to a massive and very visible pipeline of work that they've already locked in.
Pan United is lined up to be the supplier for some of Singapore's biggest nation-building projects for the next decade. I'm talking about Changi Airport's gigantic Terminal 5, where they've already secured contracts worth around $430 million. Then you add in the massive Tuas megaport, the iconic NS Square at Marina Bay, major expansions. These aren't short-term gigs. These are multi-year, even decade-long projects that provide a clear, reliable stream of revenue for years to come. It gives them incredible visibility into their future earnings.
And this right here is what that pipeline looks like when you translate it into shareholder value. This chart shows the earnings per share, or EPS. The red line is what they've done in the past, and you can see that strong growth. The dotted line is what the analysts are forecasting. They project that this upward climb will just keep going, steadily, through 2027, driven directly by those locked-in contracts and the growing demand for their green concrete.
And that brings us right back to the beginning. Based on those strong earnings forecasts, the analysts at FSM1 apply what's called a forward PE multiple of 14. Just think of that as a valuation metric. It's what the market is willing to pay for each dollar of a company's future profit. They think 14 is a fair number for Pan United, given its growth. And that simple math, the forecasted earnings times 14, is exactly what leads them back to their target price of $1.37, and to that initial 17.9% potential upside we saw at the start.
So to wrap it all up, the investment case for Pan United here shows a company that's really in a strategic sweet spot. They've got the long-term, high-value contracts locked in, they have a game-changing technology that sets them apart, and they have powerful market forces, those tailwinds, pushing customers right to their doorstep. The foundation, it seems, is rock solid. The only real question left is, how high can they build from here?